on every scar like a ransom note. The city whispers, but it don't call.
What's going on, everyone? Happy sell-off day, right? This market's cooked, guys.
Friends in the dirt and the rest just lie.
This market is cooked for the month of June, and it is what it is. Quite the sell-off, quite the rejection, actually. One thing that we do need to kind of keep in mind is, we try to quickly get back above those daily moving averages today. We tried to reclaim the 5, the 20-day moving averages, and the market said no, right? So we kind of fell through. Luckily for us, we did have some levels that we were looking at. Now, kind of zoom in just a little bit, make sure I got my drawing tool here in case I want to do any drawings. You can look to the left of the chart, right? And I'll actually move it down so we could see it just a little bit better here. Market's getting stretched, so I want to make sure to keep everything in frame. Let's do that. So we'll just start top down, right? Top down analysis. We have the +3 and daily 10 simple moving average sitting up here above, right? 29,900s area. That was going to be that upper band of resistance that we might have looked to sell. Now off the open, we quickly lost the 20 simple moving average, and then we had a little bit of a 3-candle bounce. That 3-candle bounce did provide some opportunity. Again, ranges are just absolutely insane. Right now on a 5-minute time frame, you're looking at about 105-point range. So anytime you get 105-point range on a 5-minute candle, I thought yesterday was bad, looking at about 75 points. This is worse. This is worse because we are selling off. So the problem with that is, even if you do look to get short, you can quickly get these 40, 50, 60-point bounces and then continue short. That's what makes it difficult in a sell-sided market. So when the market is sell-sided like this, everything kind of becomes a little bit more difficult to trade, unless you're trading small size and you're kind of just holding, through some of these levels, taking the break and retest of some of these levels, which you're going to cover in just a minute. There was point in times today where I was entering one micro contract and I would blink twice and the position would just be up 70, 80, $100. Market was moving 50, 60, 70 points just like that, and we're still continuing to kind of sell off here. So we're looking at the 5-minute time frame. I do have the -1, that EVX -1 area, 28,447. So 28,447. That would be that next sort of pocket that the market could try to hold. Now, again, we don't want to run into a situation where it was like last Friday, where you're kind of just looking at these areas trying to pick the bottom, because as we've seen from last Friday, you try to continue to pick the bottom, the market will show you that there's no bottom in sight. So what you're really looking for here, and to be honest, now that we are below that EVX weekly mean, you are looking to short the pops, okay? And it will kind of continue to be that way until further notice. Realistically for me, and in order for us to really say that, hey, we can start buying dips now, market would probably need to reclaim the +1 at 29,200 at a bare minimum. Theoretically speaking, I'd like to see it reclaim like 400, 500, and that's so far gone from where we're at now. So what it looks like is happening is, even though we did have a little bit of a day and a morning, a day and a night dead cat bounce, that's come to an end. So the market is going to turn into a seller-sided market, where when you do get these extravagant pushes to the upside, you want to really look for those rejection zones so you can get part of the move back down to the downside. I firmly believe it'll remain this way for the rest of June. Could I be wrong? Absolutely, right? I'm not trying to call the market. I'm just, trying to give my opinion on what I see and how price is kind of reacting. Massive power trend. I mean, and realistically, if you guys who follow EVX, you guys follow the flow on how we do things, we lost momentum way back here. So way back here on that rejection of the 20 SMA, on that loss of the 20 SMA, the momentum told us right here on this candle, we now need to flip to looking for shorts only. And that came at literally the top of the hour off the open. So 10:05, 10:10, 10:15 Eastern. Market never looked back. What kind of gave me that indication? What was the indicator? What was the signal? Where was the smoke sign coming from? Rejection at the 20 SMA and also that 5 flipping below the 10. And you can see here, ever since then, we have not even came close to closing back over that 10 simple moving average. Every pop that goes right into it is a perfect dead cat bounce, or excuse me, is a perfect continuation down on a flag pattern. It's happened twice, 3 times actually. So again, those of you guys who like to play those bear flags, look at those pushes, look at that consolidation back into your 510, and then try to take those continuations back down, right? So 3 beautiful trades, 3 very, very big moves that you could have taken part in there. So again, let's see if we kind of get something of the same here back into the weekly mean, and then a continuation down towards 28,447. That's basically what I'm looking for right now. Going to be a little bit patient. I have switched from funded accounts and my personal account to trading evaluations now. Once we get this kind of far extended, and once I start looking at the range and look at the ATRs continuing to rise here at 109 points on a 5-minute candlestick, once we start to get this big of a range, it becomes extremely difficult to feel comfortable in trades. And that's just me speaking, but it becomes extremely difficult to, to kind of not only trust the trades, but to kind of stick to the plan, just due to the fact that, a subpar entry, this thing is going to absolutely smash you, right? So like, I don't want to be involved in any type of smashing. I want to do the smashing, and it is what it is. So let's just kind of see if we get a little bit of a dead cat bounce here back into that weekly mean, 28,828. It is about 200 points away. We do have a little bit of resistance here at 694. That might be the first area that we want to kind of target. 694, 700 into 792s. Any type of scenario where we can get a little bit of a push up here, maybe on the next 2 to 3 candles, kind of create that little pocket, create that flag pattern, and maybe we get that last kind of flush down in here into -1. This looks really, really nasty on the daily chart, just due to the fact that we've got a lot of room down. We've got big things going on this week. CPI tomorrow, we have PPI this week, we have all sorts of different just nonsense, right? So a bunch of different catalysts that could move the market. Now again, I don't want to sound like a bear. They could definitely move the market in the right direction, going back up as well, but just due to the extremeness of what we've done over the past 2 months on this push higher, a lot of people are shocked, a lot of people are concerned, a lot of people don't understand why the market is selling off. Guys, when you really pull up the chart, and I'll just pull up the hourly chart here. Actually, let's go to a 4-hour. If I just kind of pull up the 4-hour, I mean, look at what this market has done over the last 2 months, right? April, May, just an absolute ripper of a rally. This pullback, realistically, a little bit of a double bottom here, but it's not like surprising that the market's pulling back. In fact, there's a lot more downside that can come just to even get back to like testing a pretty pretty recent relevant high from January, right? So what I would really be focusing on this particular pullback is a lot of this price action that was in this range, right? In this January, February style zone. So if I was to continue to kind of drive through here and create this little, whatever I'm creating here, could you see a market kind of test this area, right? Now, that would look pretty nasty. It's not going to go in a straight line down, obviously. You might see some things where it kind of comes down to each level, kind of bounces up, maybe traps those bulls in once more, and then kind of comes down. Where I think that we're going to land, whether it's this week or next week, I think we're going to land sometime in June, probably pretty quickly, is going to be down here at that 50-day moving average. That 50-day moving average is sitting just above our -3. That's the area that the bulls absolutely need to defend. And I think it's going to be a pretty critical zone here. I'll zoom in just so you guys can see it. It's going to be a very important level, because if the bulls start to give up the 50-day moving average, that could write the song for the rest of the summer. And what I mean by that is any closure below the 50-day moving average where the buyers do not quickly step back in and reclaim that 50-day moving average in the next day, 2 days, 3 days, you might see a sell-sided market for the next quarter, where you kind of get this price action that we've seen the last 3 days, where you get a big move to the upside and then you get just nasty flush, and then you get maybe 1, 2, 3 days of consolidation and then you get a nasty flush. You get 2 days of just absolute selling, like the world is going to be on fire, and then you get a big dead cat bounce, and then it continues the same narrative. If you are a bull, you want to see us defend this area down here. If we cannot defend this area, things are going to look pretty grim for the foreseeable future. But I do fully expect at least a little bit of a dead cat bounce right here. Dead cat bounce does not mean that we need to go back up and test highs. Dead cat bounce can simply be from like 27,700s, 27,600s, back up to like 28,500, 28,800. That's what I'm talking about, right? So again, the structure has sort of shifted to trying to short through these bounces. And then as we come into these resistance levels, instead of looking at them as reclaims, as potential moves higher, we need to start looking at them as test areas, as battlegrounds, where if we test those zones and fail to really close above it, we want to get short back down. Okay, 28,447, that's the target. Playing evaluations right now. Maybe let's see if I can take part in a little bit of momentum here. I fully think that we're going to get down into 450s. How much points is that? 60 points. The way that these 5-minute candles are printing, we could definitely see that move happen in the next 5 to 10 minutes. I'm going to try guys, I'm just going to be scalping in and out here and trying to see if I can get some momentum. Whoa. That was a fuck up. I had to get out of that position. I entered on one mini contract. Whoa. Luckily that was green. Okay. Let's go to micros here. All right. Let's see if we can get a little bit of momentum down here towards 28,447. I've got an entry price here at 508. So we're currently already up $72 here on this short position. Will not let it go red against me. I will clip it at break even. If anything, guys, we're up 115, 120, 130, 140. Guys, I'm out on one micro. That, and we came down here and tested that -1. That is what I'm talking about. That is scary. That is scary. Not necessarily scary because what am I trying to say? It's scary because to think about on one micro contract, literally in 10 seconds, went down $100. If you really start to think about that and you imagine putting on any type of size, 5 micros, and it goes against you that fast, it's a $500 loss. If we are trading prop firm accounts and we are trading funded accounts, you really need to size down. You've really got to take everything all the way down. And yo, what's up, Chad? You've got to take everything down to a bare minimum, because this market will humble you extremely quickly. Even when you probably are right on your thesis, you're right on the bias, a simple snapback. So for example, you getting short and a simple snapback where it's kind of just testing, it's putting in a little bit of a wick, can blow an entire account. God forbid you're trading 1 or 2 mini contracts. There's going to be so many people out there, and you're going to see this all over YouTube. You're going to see it on Twitter. You're going to see it all over social media. There's going to be so many people out there right now racing for humongous payouts on prop firms. They're going to be trying to pass as many evaluations as possible. A lot of degenerate gamblers out there are going to be YOLOing just due to the volatility here. With this amount of range, you are going to see very, very quick pass rates on these evaluations. However, make sure you are only trading with a bankroll you are willing to lose. If you are not willing, and we're getting a little bit of a pop-up here off that -1, let's see if there's a little bit of momentum here on the following candle. This candle just kind of printed here, so we need to see how much does this push up. If it does want to push up a little bit, we have room to 572. So I'm going to try to be scalping in and out here on these evaluations. Again, make sure that you are not playing with money that you do not want to lose, because you will blow accounts in this market. Not really getting to pop as fast as I want here. Position is pretty much flat. I want to see us pop off of this -1 very, very quickly. I'm just going to take it off. $40 there. I'm just going to take that off. I don't like the way. I don't like how slow it is. I would have rather it pop up extremely quickly. I don't like that. And again, going against the trend, it never feels right. So we kind of have to think about it, right? As a team, how do we want to try to navigate this? How can we use these times to be to our benefit? How can we use this momentum to our favor, right? I went out yesterday and bought another 5-pack of evaluations, so hopefully I can get these things passed up this week. Again, I'm going to have to be forced to trade 1 to 2 micro contracts, so it's not like I'm going to be looking to pass them in one day. Although, again, in this market, can you do that? Can I see that happening? Absolutely. But I'm just going to take my time personally. I'm not going to rush through these sons of bitches, because you know, at the end of the day, regardless if you're investing $100 into prop firms, or you're investing $500, you're investing $10,000, or you're investing $1, your money is your money. I'm a big advocate of protecting your money. We do not want to just keep continuing to throw our cash out there in just hopes of gambling a fucking lottery ticket. To me, that's stupid, right? I want to take the most calculated risk that I can. And if I lose taking the most calculated risk that I can due to my knowledge and experience, and hey, I'm okay. I can live with that. But what I can't live with are the days where I know that I'm trading too much size and I'm throwing around a fucking dozen trades a day on the same account instead of spreading it out, and I end up losing 1 or 2 accounts. It pisses me off more than anything in the world, because I know that I'm a better trader than that, and I know that I'm just rushing the process. So I don't want to rush the process. Depending on how all these accounts finish up right now, I've traded 4 accounts so far. They got balances between $250 and $800 profit on these evaluations. If I can manage to keep these all green and the market doesn't do something absolutely crazy to me today, I'll probably go out and buy another 5-pack, or maybe I go out and buy another 2 or 3 with another firm, because I definitely want to try to take advantage of this market. There's 3 funded accounts that I have right now. I can't fucking trade them because I traded them in the after hours yesterday in the Asia session, and these accounts are literally ready for payout. So I don't want to screw giving anything back, because I can finally request a payout from these fucking Apex accounts. Again, I say that like it's a bad thing, or it's taken me a while. From start to finish, it's only been 9 days. So again, if you really think about it, you know, you can take advantage in these markets, get these accounts passed in 2 to 3 days, and you can, you know, take the next 7, 8, 9, 10 days to try to get that balance up so you can take a payout. I could have actually taken one yesterday, but I wasn't over the fucking consistency rule. I needed just a little bit more cash, so I had to go put down $200 more in profits on these to get over that 50% consistency. I had one really big day. I don't know what the hell happened. To be honest, I think the dashboard actually screwed me, because I don't ever remember having like the size of day that I had. I don't recall it, but for some reason I feel like it was like $500 more than what I actually made, which is not a bad thing by any means. It just forced me to have to trade an extra 2 days, which is fine. I mean, in the end, what's going to end up happening here is I'm just going to take the max payout for this pay period of $1,500 instead of the $1,000 that I was going to take. So what I'm looking at here, guys, I want to see, right now we're holding this -1. Could be a little bit of a mean reversion spot though. But again, we got to be extremely cautious, because 28,066, that would be the next kind of target. What would that put us down on the day? Put us down about 1,100 points. If you were to ask me this 2 or 3 years ago, if I think the market can go down 1,000 points, I'd say hell no. After seeing what happened on Friday, after seeing what's happened in 2020 during COVID, after seeing what happened, you know, bits and pieces in day on Liberation Day in 2025, I would say, yeah, I think we could get down there still if we don't hold this 447 area, right? I do think we get a little bit of a bounce here. Before that, I would look for a bounce again, playing this ATR of 100 points. Maybe we're looking at that bounce to kind of continue into like 650. 650 would be a good spot. The bounce idea comes off the table if we lose 847, right? So 28,447. If we lose the -1, that bounce idea comes completely off the table. So we'll be a little patient here and see what this market wants to do. Hopefully you guys are all doing good today. If you're not already locked out, hopefully you're just pitter-pattering and playing around with some accounts that really are not going to hurt you if something goes bad.
Carry hate, carry loss. Carry broken love.
Guys, if you could do me a favor, hit the like button here. I'm trying to see what it takes for YouTube to actually start pushing this on the algorithm. The views that come in on these live streams, it gets up to about 100 views after the live stream has been uploaded, but I just feel like there should be more. I just feel like there should be more viewers that come in when the stream is actually live. I don't know why it's not popping YouTube's homepage or the search engine. So maybe a few likes from the few people that are in here, see if we can get this thing pushed out. I have been doing homework on other live streamers, and a lot of the other stuff that's going around is absolutely crap. And it's not to say that my live streams are better, not to say that I trade better, not to say that I make more money than any of these clowns, but a lot of these guys are clowns. They're doing shit for viewership. They're doing shit for clicks. I see a lot of these people dancing around. They're wearing fucking stupid costumes. They're screaming. They're doing all kinds of weird shit to get views. I mean, I guess that's cool. That's one way to do it. But at the end of the day, I'm a trader first. I got to pay my bills. I don't have time to play dress up. The second thing that I see is a lot of people who they post a lot of big gains, right? They're throwing around massive size. I think that's it's fucking stupid. At the end of the day, I get why they're doing it. Get more affiliate sales when your viewers blow accounts, which is cool, right? Make your money, get your bag, but at the end of the day, it's just fucking stupid. It's a waste of time, right? Now again, I don't sit here and claim to be some millionaire trader or nothing. I do make over 6 figures. I make a living off this stuff, so I try to treat my trading a little bit more serious. But again, hey, do I wish I could be like the 23-year-old kid who pulled in $2 million on the short on Friday? Absolutely, right? Do I ever see myself putting on 60, 80 mini contracts at one time? No, I don't. So will that happen to me? Probably not, right? Because God forbid it goes against you, you're gonna just be liquidated. And I'm not in the business of trying to get liquidated. But I do give these guys a lot of credit who can gamble like that. It's pretty impressive. I want to see if we hold here at this -1 again at 28,447. This might be a good risk to reward area for a potential long-sided scalp here if we can kind of pop through this 5-minute candle just started about a minute ago. The risk on this would be, see, the thing is, if you guys, if I zoom in, this is what I have a problem with, right? I have such a hard time, is that if I look at this chart, this looks like a great bounce, which it is a great bounce, and I'm just going to take it. The thing is your risk goes right here, right? Your risk goes automatically at the bottom of this candle, which when you look at this move on screen, on the candlesticks, it doesn't look like a lot, but realistically, this is risking fucking $100 on one micro contract. It's absurd, right? It's fucking nuts because of this volatility. So even though getting in off of a bounce here and putting my stop loss there, I'm looking at over 50 points. This position is already up $80. This is crazy, right? Again, I know these numbers are not big to some who are throwing around 1 or 2 mini contracts, but I mean, holy shit, look at this crap. $132, $140. I mean, my entry price is $28,477, right? $28,477. This is nuts. This is one micro. This is absolutely ridiculous. Can I add into a winning position here? Let's add another one. We're up $212 here on 2 micro contracts. I'm just going to take that off just because. Brings this evaluation up to about $1,000 profit here, playing 1 micro essentially until I added that second one there. Put me up at 2 micros. I don't get it. Maybe I should have traded the funded accounts today. I just can't see myself giving this fucking money back. Not when it's already in the bank. Yeah, Viv, I don't know when we're going to get that back. Might be months. Literally. I can't even, I mean, again, my memory sucks now, but I can't even remember the last time, like, the 5-minute ATR was below 50. Could have been last week, but I'm just, you know, I'm making a point. I know. Hopefully not. The thing is once the market goes into a sell-sided market, the volatility goes sky high. The volatility goes sky high, you know? So when that happens, the ranges really start to expand versus when we're in a nice trending normal bull market where you have, you know, far more green days than red days. The ranges are very small. They're contracted. You take out previous day highs, you push up a little bit, right? You take a little dip off the open and then you push the high. And then you take a little dip off the open and you push the high. Very controlled, you know. Bull markets are definitely easier to trade, and there's a lot of people, like, as of late. Again, it's a lot of younger traders that I see, you know, and I don't claim to be some old trader that's been doing this for 50 years or anything, but a lot of like the newer generation style traders, they like this heavy volatility. For me, I hate it. It's horrible, right? And I understand that we can make a lot of money in this volatility, and we do have to participate. Like, that's the thing. That's one thing that I have learned. Like, you can hate the volatility, you don't have to be in love with the price action. You do have to be a participant though in these style markets, because if we do wait for things to get quote unquote comfortable for us, we miss out on a lot of the moves. Like, I have a bunch of buddies who do they invest long term, right? And a lot of these guys did not take part in any of the run up over the past 2 months, because for one, they're in at a little bit of a better price, so of course their portfolio is growing as we're going up, but they didn't add into anything. They didn't start any new positions, right? And it's like they're in fear of, well, if I buy up here and the market potentially pulls back. I get that point, but you're missing out on a lot of the move. The market was up 35% from, the end of March. From 10% down to over 25-30% up. This market was up 35-40%. You would have made money. You could have treated it as a swing trade. You could have made some cash. So you do have to participate in these markets. A wise trader once told me, and this is a family friend, and I've mentioned this before, I learned a lot from this particular trader. A long-term professional trader who does this for a living, who makes like a good portion of their income off of the markets, you're realistically only making money 2 quarters out of the year. The other quarter you're flat, and the other quarter you're probably break even to red, or you're red 1 quarter, you're flat another quarter, you're flat another quarter, and then you really just profit 1 quarter. So it's not like every single day we show up to the market, although it looks that way with social media, it looks that way with the trading discords, it looks that way with YouTube, it looks that way with everything we read. It looks like we're coming into the market and we're making money each and every single day. And yes, people are making money each and every single day, but there are outlier days mixed into those quarters where traders can give back a week's worth of gains. Like there was a day in 2025, I think it was in November or December, I had a really good 2-month stretch. And then I think it was November. I want to say it was the end of November. There was a week in November where 1 week I gave away 1 month's worth of profits. Now, again, I did have a really, really good quarter, so I was still net positive on the quarter, but I gave away 1 month of profits in 1 single week. Now, when you get to a point where you're using a lot of your trading income and you're treating this as a business and you're funneling money. Wow, here we go. We broke through here we go. Hold on, guys. Hold on. Wow. So big flush down here again. I mean, just massive 270 point range candle. 207. Could you imagine if you were holding long still on this potential bounce? You got destroyed. Guys, when I was in 1 micro contract on this bounce, if I was just holding it and hoping and saying, okay, it has to bounce here, that one trade could have put me down $400 on 1 micro. To me, it blows my mind. That's crazy. That's no way to manage risk. It's no way to manage risk, right? So if I ever, and again, for all of you guys who are in the EVX trade room, some of you guys have been with me for a while. Just if you learn anything from me at all, if you can take any of my screw ups or any of my experiences at all, if the trend is down and you find a long opportunity, it's a quick scalp. It's fast. Get in, try to get green or get flat. If you get in and it doesn't work and you feel uncomfortable at any moment, flatten all. Okay? Flatten all. The same thing for if the market is trending to the upside and you find a pullback or you find a resistance zone where you think you could take a little bit of a short, If it doesn't work right away, get out. If you don't make a little bit of cash, get out. If you make a little bit of cash very, very quickly, get the hell out, because the market is not going to come back and save you. Versus when you could have gotten short literally to the exact second today and you would have made money. Anytime you could have got short today. Anytime. I don't care when. Anytime you could have got short. With the right position size, you would have made money short. That's 100% a fact. Why do I know that that's a fact? Because to the exact tick right now, we are still putting in new lows, which tells me that even if you were a part of a candle like this green candle where it bounces 130 points, or this candle here that bounces 125 points, or this one that bounces 118 points, if you were trading one micro, the worst case scenario, you were down $250. Worst case. Does that blow you up? No. If you would have just bit down on the bullet and say you're going with the trend and respected what the flow is showing you, what the momentum is showing you, you would have made money at any portion of the day today going short. So what's my point? Is the point that when the market's trending, just click the button and get in at any place? No. You still want the best opportunity. You still want the best spot to try to get in. But what I'm saying is that when you are going with momentum and you are going with the trend, more times than not, and I will go on record and say this for myself, you can use your own stats and analytics. I will say that 7 or 8 times out of 10, if you are going with the trend, the market will save you. The market will save your bad entry. Here's the other side. If you start going against the trend, if you start going against higher time frame levels, if you start going against macro technicals, the market will show you that you're an idiot every single fucking time. And that's a fact. How do I know that? Because I've been in situations where I have gone long when the market is selling off. I'm trying to pick the bottom, and the market doesn't give me more than a tick. It just gets me in and somehow just goes against me. Why? Because I'm an idiot and I try to call a bottom, right? So just always remember that. If you take anything away from me, always remember that. The market will always save you 7 or 8 times out of 10, even if you have a bad entry, if you're with momentum. But it will slap you across the mouth every single time if you start trying to get cute and pick where you want to decide the market to bounce at, especially when you're going against other levels. We had helicopter shot down. I just popped the news feed. Let's see. Iranians downed one of our helicopters last night. Market's just hearing about this now, or did we already know about this and they're reacting to something that they know, and they're reacting to what they already knew is coming. Yeah, I see that. Trump says the US must react to Iran assault, which I don't blame him. Yes, we should react. But is this selling here an indicator of what big money already knew was going to happen? And I'm not just referring to this one helicopter that was shot down, but are things going to start to escalate from here? And is CPI going to compound on that? And is PPI going to compound on that? Could be. Market's never wrong. The market will always front run everything. The market itself is the only one who can front run news. That's a fact. Every time I try to front run something, I get steamrolled. Christopher Hayward passed both accounts today on Legends as he just went for it. Nutty boy. Follow the trend, really risky. No more of that now. We'll be activating one of the accounts when it lets me and literally sticking to 1 to 3 micros. I don't know if Chris is listening. I just really hope Chris sticks to 1 micro for at least 1 to 2 weeks. I would not even go up to 3 micros, not in this environment. Congratulations to Chris for passing those evaluations. Again, like I said, you're going to see a lot of this, guys. You're going to see a lot of this. And Chris is in our room. He's part of our team, but you can see it. You can see that a lot of people are going to pass a ton of evaluations right now, which I don't blame you guys, right? Go out there and try to pass a bunch of evaluations right now. You can get them done trading a handful of micros. You don't even have to trade minis. So, you know, use these times to try to get ahead. Just remember that when we do get into the funded accounts, we for sure want to dial it all the way back. Rejection here at the -1 and the 5 SMA.
But I remain cursed by the blood moon serenade.
Trying to catch another little piece here. 365 is my entry. 365 short is my entry here. I'm just taking a very, very quick scalp. Just going to take the $40 there, 35 bucks. Brings this account. Oh, did I switch accounts? Good. I switched accounts here. This account's up 415. I need to go through my accounts here and see what the hell's going on here. That account's up 415. This account is up 300. This is 422. 307. 900. Okay, let's trade the smallest one first. If I get something else, I'm going to trade the smallest balance. Try to protect the ones with a little bit bigger balance. $1,100 points down. What are we doing here? 50-day moving averages in magnet. 50-day moving averages in magnet. God, I wish they gave us a little bit of a bigger bounce. I would have loved to see a test of that 10-day moving average. I had a complete plan of a test at the 10-day moving average to short the Qs for a swing trade. The only thing I am short right now, and I have been shorting for about 2 weeks, is semis. Triple leverage. It's up $1.30 a share. So, I mean, trip out on this, guys. This is a triple leverage ETF, right? You can't even see it because that's how slammed it's been. So we all know that semiconductors have been absolutely running, right? Just absolutely just on a fucking tear for like a year, right? I mean, semiconductors, right? So I'm shorting the daily semiconductor 3x short leveraged ETF. If I zoom in here, right? Zoom in. I mean, this could I is this the floor? I don't know, right? Because again, remember it's inversed. So look at how far it's come down, right? Because obviously semiconductors have been running. But if I just go back to before we started this run up in March, this ETF was trading at $49. It hit lows of $4.82. Now it does get reset every day in the way that, again, I'm speaking like as if you guys don't know what triple leverage ETFs are. But let's say, for example, the semiconductors are down 1%. Well, it's 3 times that. So this ETF would be up 3%, 4%, right? So like, look at, for example, today, it's up 22%, right? So if you look at SMH, which is a semiconductor ETF, SMH is down 6%. So what's 6 times 3? 18.5. So this is actually down 6.5%. Let's just call it 7%. That's 21%, right? On the flip side, whoops, and I can't even see the chart here. But look at the semiconductors ETF. So back before we started this run up, the semiconductors ETF was trading at $362 a share, and it's completely doubled. So think about it. Are these pullbacks anything? Is this pullback anything? Absolutely not. So many people, right? The right people, the people who know the ins and the outs, which is not us, have made so much money already. So they can sell now. They can grab all of this liquidity. They can shuffle it into this SpaceX IPO. They can buy the bear market. They can buy the deeper corrections, and they just keep recycling cash. It's the way that this world works here. You buy low and you sell high, right? I mean, it sounds like common sense, but it's harder to do. It's harder to time. What I'm trying to do here is I'm trying to buy low on SOX X. Now this is very dangerous because it's triple leveraged, but the way I'm looking at it for a swing trade is how much more is this fucking gonna go down, right? How much more are the semiconductors going to continue to rise? I just need them to take a month break. I just need the semis to take a month fucking break, get this thing back up over the daily 20 to test at least the 50-day moving average. Could you imagine if this thing went all the way back up? Now, I think that the semiconductors would have to take a 50% haircut, but if you just go back in time, I mean, at one point in time, this was trading, you know, last year it was trading at like during the tariff debacle in April, right? Look at what it shot up to, $700, $800. Again, these triple leverage things are fucking nuts, but I'm not saying it's going to go up that much. The semiconductors would have to take like a 70% haircut like in a week for that to happen. The longer they drag it out, like if semiconductors come down 20% over the next 3 months, this ETF's not going to really do much. It's all about speed here with these things, but I need some speed here, right? I mean, I got 1,000 shares of this crap. You know, even if this thing goes up $10, goes up to like $16, it's $10,000 trade. That would be nice. I need that. I need that. Little summer vacation money. Gonna need that, semis. Hey, semis. Gonna need you to take a break for a minute, huh? Daddy needs it. What a terrible looking chart. What a terrible looking chart. Have tried to tear me down. Knives of silence. NASDAQ is testing the weekly 10 SMA. Weekly 10 SMA. Weekly. And a nasty hammer candle at that. So again, look at the break of the -1. Look at the retest. Guys, start taking screenshots of these setups. So when you do get to these like super trending days, you start reflecting and remembering back like what a break and retest looks like. Break, we close below it. Okay, you know, you can chase it, sure, but just wait for it to back test. And when it gets rejected and stays under, you can get short here. I mean, from 28,400 to 28,270 is over 150 points. You know, break, retest, go. Now, whether this stands here, we don't really care. 150 points is enough for us to make money.
Brothers fall with their eyes still wide. Dreams get buried on the darker side. I was raised on pain and pride. Grew up where the dust don't settle, where the nights hit hard
What a shit show.
and the steel stays heavy.
You know what I'm having a problem with is I know potentially what would be a healthy pullback here. Right, in my opinion, it'd be way down here at 27,000. Now, God forbid we give that up. I think the market will go into a deep 30-40% drop, but I don't think it's going to go that far. Maybe 27,000, 26,000. Trying to think here, between 25 and 26,000. My question now becomes, where the hell do I start deploying capital? Do I buy the whole way down? I don't want to be an idiot buying the whole way down. I think my next buys for the portfolio will be down somewhere at the 50-day moving average. And then from there, I will have to wait and see if that's a good enough bounce. If we lose the 50-day moving average, then I want to have as much capital for 25 and 26,000 to start deploying some things for the portfolio. Because I think in the next 18 months you can double your portfolio, easy, maybe even triple it.
If you're looking for mercy, you're in the wrong place. I was built to fight, not fade away. Yeah, I walk through the flames alone. Turn that hurt into a backbone. I was raised on pain and pride. No place left to run and hide. Every bruise just drew my line. Made me who I am inside. Yeah, the fire don't lie. It's the reason I survive. I don't beg, I don't cry.
I'm gonna set some alerts here, guys, on some stocks that I'm interested in. So just don't mind me.
You can see it in my eyes tonight. Ain't no fear left in this fight. All the hell I left behind still burns, but it made me right. I was raised on pain and pride. Through the dark I learned to rise. Every scar became my guide. Every fall a step to climb. Yeah, the fire don't lie. It's the reason I survived. I don't bend, I don't hide. cry. Yeah. They can talk. Let them talk. They say I'm just a small town shadow, dust on a nowhere road.
Got some levels here. If I can get maybe start a nibble on the video at 190, a little bit more of an aggressive buy towards 170s. 160 would also be another buy. I gotta zoom out. I gotta think worst case scenario. Worst case scenario here. Where would I want to be an absolute buyer at? Tariff lows put us at $86. 150. Got another alert here at 150. Then we have to do this double bottom at 94. You know, I don't know if these alerts will ever get tagged, you know, in the near future here throughout the summer, but if they do, it's definitely some areas where I would love to be a buyer.
Silence, no cameras, no applause. He hears every word unspoken. He knows every loss. I don't need a throne, no spotlight. Don't need fortune or fame. The whole world turns its back on me. He still calls my name. You can drag my name through the dirt and the flame. Say I'll never rise again. You can doubt every step that I ever take. Say I'll never win when my last life fades in the sky.
You guys gonna be a buyer in anything for a portfolio, guys, or not really? If we continue to come down, I mean, I still think we would need to come down a little bit more, but would you guys be interested in buying something?
Wind on the highway, dust in the sky, another long road, and I'm still alive.
What is Zillow trading at? 30 bucks? It's off the floor, huh? Let's see.
never die. Still breathing, still fighting.
It's a double bottom, man. What would be a catalyst that we would need for real estate to come up?
Still breathing, still breathing.
I mean, it doesn't hurt, right?
Still breathing. Still breathing, still
They blew earnings out. Yeah, that's what I'm saying. We're buying the tech in real estate. But am I reading this correctly? They blew earnings out. 11-cent estimate, 53 actual. That's right. I mean, this is taking us all the way back to 2024 prices. What's the worst that can happen? Yeah, what's the worst that can happen, right? Puts in a new fucking low. It's a 2-year floor here. Huh. Let's see if we throw a fib. 50% retracement from here is about $63. 38.2, which I can see is a little bit of a realistic target at 56. Very interesting. I might actually start a little position here. Stop loss would be pretty easy. I mean, I could just give myself about $1. Give myself $1 or $2. I'm gonna set an alert on this over a previous day high. I'd like to see it at least get over a previous day high, reclaim the 5-day moving average, and then it might be worth starting. And then if it does pull back once more, I can add in on the pullback and then hope for some type of run up here. So I got a little alert about 36.5. Nice.
Still breathing. We grew up in a worn-out house, cracked walls and a hand-me-down couch. You were smaller, I stood tall. First one swinging when you'd fall. Daddy's voice like thunder rain. Mama praying through the pain. Front yard fights and busted lips. I swore you never
Reclaim here of
take
-1.
it. We
Be looking for a little bit of a I missed it while I was fucking scanning stocks. We reclaimed the 5 and 10 here. Nice little bullish momentum. I don't know if anyone took that long. Over 28,488. 28,488 was the move there. I mean, went up over 100 points. That's it, right? What am I going to do here? I can't chase this anymore. I'd be looking for a break and retest now of -1. A little retest action of 28,447. If that holds, be a good little spot to kind of get back long here. If it doesn't and it continues to the upside, we would be looking at that weekly mean to get tested again, 28,828. Keep this in mind, guys. If we do not reclaim the weekly mean on the close today, there's going to be more selling. Look at the 50-day moving average now. It's fucking throwing stones away. I would not be surprised to see this market bounce into a weekly mean, maybe even into VWAP, which is sitting way up at 29,200. And then tomorrow, any spike is going to get sold into that 50-day moving average test. And then that's going to be the determining factor. And guess what that lines up with? CPI. I could see a bounce from here. That's probably what's going to happen. We're going to bounce from here back into mean, back into 29.2. CPI is going to either pop and then fade us down. If they front run us and we're trading below before CPI, if we are trading below the 50-day moving average, it's going to spike down and then massive V recovery. If we are trading above tomorrow before CPI, it's going to spike and then lose and sweep the 50 SMA. That's the game plan. All right, guys, I'm going to go for a walk. I'm going to go do some things. I got to go mow the lawn. Stay safe out there, guys. Again, one micro will do it for today. Catch you guys all in the next one.
Brothers to the end, through the dark.